Are you looking to buy real estate sometime this year or possibly in the next few years? Well, in today's podcast episode, I am going to share with you one strategy that you must master if you desire to expand your real estate portfolio. Welcome to another episode of the Never Lose a Deal podcast. I am your host, Lorillia Brown-Phillips, and today that is what I'm going to talk to you about, and that is the one strategy that you must master. Now, I know you're wondering, okay, Lorillia, what is the one strategy that I must master? Let me tell you this: I don't care what it is that you have a concentration in real estate, whether it's fix and flips, multifamily, short term rentals. This is the one thing that is separating currently, right now, the investors who are currently doing deals versus the investors who are sitting on the sidelines complaining. And that one strategy is creative financing. Now, I am going to give you a disclaimer. Creative financing looks different for every investor. There's not one way that it can be done. There's not one way it has to look. But one thing that is certain, when you put in place a creative financing strategy, what that means is that it is different than the traditional way of acquiring real estate. So if you don't get anything from today's episode, understand that when you deploy a creative financing strategy that is best for what it is that you are pursuing in real estate, it is not going to look the traditional way. And I know you may be wondering, well, what is the traditional way? Well, in other episodes, I shared with you a traditional way is a person who may be looking for a house. They may have found a house or a property or an asset, whatever you want to call it, on a multi, I mean, a MLS, or on Zillow or what have you. It is priced at a retail price, and they are looking to get financing the traditional way. That is the traditional way of buying a real estate. That is not the strategy that is put in place when you decide to do anything creative. Because one of the great things about creative financing is you get to dictate what it looks like based on your buy box. In previous episodes, I talked about buy box, but if you know what your buy box is and you know the financing that you're going to put in place, whether you're going to use your own financing, you're going to use financing from a third party, it has to be a win for both of you. And that is what we're going to talk about today. Now, before I get into creative financing, one thing is certain: by the end of this episode, I'm going to give you two examples of what it can look like and how it has looked like for myself and how it has looked like for the investors that I'm currently working with. Now, just in case you may not know this, but the process, I paused a little because I had to think about what I was going to say. But that whole idea of the I'm just going to trick my way into buying real estate. And when I say trick, I mean you're just going to come up with some type of idea to maybe trick a lender or even trick yourself into thinking you're going to buy real estate and build this massive portfolio. Those deals are over. And the reason why I say that is because I am noticing, even with some of the lenders that I'm working with, is that financing um, is still fluid. Lenders are still lending, but they are being very keen on the type of deals that they are doing. One, there's a big rise in fraud. Fraud is very prevalent. Went to a conference a few weeks ago, and those are some of the things that many lenders are saying, that fraud is on the rise. And then also, um, when it comes to creative financing, it allows you to look outside of other ways to be able to get your deals done, especially since with lenders being so strict with how they are lending. Are they lending? Yes, they are, but they're keeping a very keen eye at what they are looking at. So let me share a story with you. I came across creative financing because many years ago, when I got started on the investor side, I'm not talking about my primary home, but when I got in started on the investor side of real estate, one of the things that I was taught is that if you understand the numbers of what it is that you're looking to do, and that has to do with what you are interested in real estate, the numbers is the deciding factor of if the deal is going to get done. The reason why the numbers are the deciding factor is because it allows you to really be able to underwrite what it is that you're doing. That is it going to work for you? Meaning, is there profit in it for you? And is it profit for another person that may be involved in it? And when you are able to look at those things, hence, you get to do things that are outside the normal way of buying real estate. And the reason why I say outside of the normal way, because most people, when they think of real estate, they think of it being very stringent. And by all means, it has its place. If you're just starting out, I did podcast episodes about that. You know, a person may be a house hacker, and so they're leaning on the expertise of their real estate agent or with the person, the mortgage broker who is helping them. But when you decide to move over to the investor side and you do want to do some things with creative financing, is going to allow you to go outside the box. And so at that time, going back to the story, the person that I was working with said, Lorillia, if you get this one thing down packed, and that one thing is that understanding the numbers in a deal. And so in the last episode, I touched on, my journey with wholesaling. And so during that time, money was not a problem. I did not decide to be a wholesaler because it was some type of trauma respondent. I needed money. It was a way that I could get into real estate because I originally wanted to be a fix and flipper, but I had a mentor, coach, or what have you, who had said, Lorillia, master the basics of understanding how to put a deal together. When you understand that, number one, it allows you to not take on so much risk. And then it allows you to really be able to look at the numbers and see if it's a win-win for you. Because the thing is that it doesn't matter in what market, and this is the best thing that that mentor could have told me. It doesn't matter what market you are in, deals are still being purchased. That was in 2008. And if you remember in 2008, um, that's when the banks have failed. You even have some real estate professionals who will even say that, hey, they were moving and shaking prior to 2008, and then whatever they built in 2008 and 2009, it kind of folded. Well, lo and behold, 2008 is when things took off for me. And it was only because I was in a community with individuals who were doing deals. And so that particular coach said that people are still buying deals. If the numbers work, there's always somebody who is going to buy a deal because the money doesn't matter. That is what I learned. The money doesn't matter. So when I hear people now today say that, oh, money's hard to get, this, that, and the other, I already know for certain they don't know how to put a deal together. Because even in, and I've talked about this before, even in the asset based lending space, there is $30 trillion being circulated from asset based lenders who are looking to deploy capital into the marketplace. That still does not include private lenders who are lending. That still doesn't include self directed IRA lenders who are. So money is still circulating, but it's only going to a particular real estate transaction where there is a win-win for both parties. So that is why I said earlier the real estate trichology it has gone, and it's, that boat has sailed out. You are not going to trick someone into giving you money today. Now, once again, you may trick yourself because there are a lot of people who will sell you on money is hard to get. And I'm going to say this: if you ever come across someone, everything is based on patterns. Don't take my word for it. Just look at the patterns of economics. Um, are there some, uncertainty in the market in general? Yes, there is. But rest assured, things are moving. And the thing is that everyone will not get a piece of the pie. Why? Because there are some people who just will sit on their hands. That's why I always say it's easy to do some things when everything is fluid. You figure, in 2020 up into about 2022, it was easy to make money in real estate. Everyone had a strategy, everyone had a trick, everybody had something that will show you that you could be a real estate millionaire overnight. Well, unfortunately, those conversations have somewhat quiet. And so that is why I'm saying if you master the strategy of creative finance literally teaches you discipline because it is not cookie cutter. That's why I said it doesn't matter what it is that you're doing in real estate. If you know what it is that works for you and works for the other people who are involved in the picture, whether it's the person who's selling, whether it's the third party and you're leveraging your funding, whether it's even you and you're looking at, is this a win and is it part of my buy box, you're not going to lose. Let me go back to my story. So that mentor slash coach said that even in 2008, if you are able to follow this framework, and the framework was pretty much being able to underwrite your own deals that works for you. And that is what I took. I took that framework and pretty much was able to run numbers. That's why in the other podcast episode where I talked about a real estate agent had the same tools as me: access to the MLS, access to being able to submit offers to the bank, but got mad at me because I made more money in the transaction. I made more money because I had a level of expertise they didn't have. We had the same tools. If anything, they had the tools. I didn't even have the tools because I had to submit my deal to the real estate agent. But the real estate agent did get, have to be honest, they got a little agitated because here I made north of $10,000 and they only made roughly, by the time they split it with their broker, $1,000 or $2,000. Had the same tools, but didn't have the same expertise. And that is why I'm saying, even today, Tools are still accessible. If anything, there's more tools now more than ever, but everybody is not going to be able to examine what's necessary to find a deal. And that's why I said right now, creative financing is the place where you want to be able to master. I tell people all the time, spend the next 90 days, if you have never did that, just examining deals. If you had a blank check, do you know how to be able, and like I said, it works with whatever it is that you're doing in real estate. Are you able to really be able to underwrite the deal to the point that it's a win-win for you, the person who is selling you the property, and if you're using third party financing, or if you're using your own money, because once again, you want it to be a win-win for you. That's where you want to start, because a person who's thinking, oh, I need to get the money, you're already in a losing position. There's no lender going to let you do play with their money. And that is what a lot of people are hoping. That is what a lot of people have been sold. So that's why it's easy to have someone to tell you on the internet that money is hard to get, because most people who are selling you that, they know that that's not a hard task. It's too much money floating around. I just said $30 trillion in the asset-based lending space. That still doesn't include private lenders. That still doesn't even include self-directed IRAs. There is pools of money that is being circulated in the marketplace. And with that being said, in my next I'm going to have two guests coming up in here on Never Lose a Deal podcast. Both of those guests are going to give you real life examples of deals that have been done creatively. So people are still creating deals. I even have one guest, and I know that that show is not going to premiere until next month, because due to the frequency of how I post these podcast episodes, this particular lender is lending on only on 60% LTV on deals. 60% LTV, what that means pretty much, if you don't know, those deals aren't everywhere. You got to really look and go through untraditional means to find deals where it is a win-win for a lender to lend on at 60 to 65%. And that is a sweet spot for that particular lender, private lender, because they know that it's not going to be a big loss for them. And those are some of the ways that you want to be able to even look at your own deals. So going back to my story, so here I am, 2008, everyone is saying the sky is falling. No one is doing deals. Similar to right now, it's a lot of hysteria, even though the price of everything is much higher now than it is in 2008. Rest assured, people are still doing deals. It was because of through that exposure in 2008 where I was in a community of people saying, and this particular coach saying, if you find deals based on this framework, it is a win-win. So that is what I did, because I knew that as long as I stayed within this but within this measurement of it being working for me, as well as it can work for the person I'm selling it for, it is a win-win. Another thing that was that I remember this mentor coach explained to me, that any offers that you put out, be prepared to buy them yourself. And that's what made me even have a much keener eye on what it is that I was doing, because I had to make sure that if I put my offer to this bank to buy this deal, that if I'm unable to sell it to someone, I better be prepared to buy it myself. Now, unfortunately, in the day we live in today, no one cares about your reputation and your integrity. So I don't know. I guess people now just putting out, um, they're just putting stuff out and they don't care anything about reputation and your integrity. Well, for me, it mattered, and so that is what I made certain of. Well, lo and behold, put in a few offers. Once again, every offer isn't going to be taken, but I put in offers because going back to, like I said, the particular private lender that I had that I'm going to have on the show, it's actually been recorded. It just needs to be put out. Literally said they're only lending on 65% LTV. So those type of deals aren't easy to find. So I say this to say, did I put a lot of offers out? Yes. Only a few got accepted by the bank. Okay, well, the ones that got accepted were the ones I moved on. The person I sold to, they were buying. They did not let the hysteria going on in the market of 2008 stopped them from buying deals because they had their own buy box. And it became a win-win for both of us because I knew the numbers that worked for me to make money, and then also what was a win-win for them. They shared that with me. So now everyone gets to eat. The agent gets to eat because uh, deals are being submitted through her to go to the bank. Maybe wasn't happy with, not getting paid as much as me, but unfortunately didn't have the same expertise. You have the tools, but you don't have the knowledge. And then, of course, the end buyer, it's a win win for them. They get to build out their portfolio and they don't even have to market for the deals. The deals are being handed to them. I say all that to say that is an example of creative financing. Taking something that traditionally most people would look, wouldn't even pass on it. Well, because we're talking 2008. I was literally buying bank owned properties. Not that many people were doing that back then. Bank owned properties, I was doing a double close. I would close with the bank and then resale to my end buyer. Wasn't a lot of people doing that. And so now we are in 2026. Creative financing still being done. An example of that would be in today's time is a client of mine recently wanted to buy a commercial property, getting SBA financing. 20% of it has to be used. The 20%, they had 10% of the money, the other 10%, they were actually able to do a seller finance note. That's right. The person who was selling them the property did a seller finance note for the other 10%. Once again, creative financing, doing something that is somewhat traditional because you're buying SBA, but then also doing a portion of that where it's creative, where you get the seller who's selling you the property to basically hold the note on a portion of the sale, creative financing. And the good thing about that example is the guests that I will have on the next episode of the Never Lose a Deal podcast will give you an example of something that they did similar to that. So I say this to say that is what creative finance is. It gets to look different for everyone. There's not no one way that is done. Anyone who's telling you that there's only one way to do creative financing, I want you to run away from them because pretty much creative financing gives you the opportunity to create a deal out of it's a non-traditional transaction. Is not traditional in the sense. It's non-traditional. And that's what I can't stress enough to individuals. The people that you're going to see buying, they may not tell you this, but that is what they're doing. They are doing creative financing transactions. transactions. And once again, they may not be telling you all the moving parts. You may be thinking, oh, it's just because they have the money. The money's never the issue. It is the deal to be able to put together that it's going to be a win-win for you, the person who's buying it. If you are leveraging someone's capital or your own, it has to be a win-win. And even for the person who's selling, is it a win-win for all parts? And a lot of times that's not going to look like the traditional way that people buy real estate. And as lenders get, like I said, they're getting tighter on their grip on what they're lending at, only because of the big rise in fraud. People and experienced investors are going to find other means to be able to buy and accumulate real estate. Don't think people are, sitting on the sidelines at a dead halt, not buying anything. Are there a segment of people who are like that? Yes. But then there also are people who are buying. They're doing a lot of creative stuff. And like I said, creative financing gets to look like you want it. It's no one way of doing it. And so you will be surprised as you talk to different people, and they'll say, hey, I did this transaction and it may look different for another person. But one thing is certain, it's probably going to be creative. It's not going to be the way that you know how real estate is purchased. That's why I always say underwriting, understand the underwriting, the numbers of the deal is what matters. Most people don't know the numbers, and that's where people lose their shirt or they get caught behind the eight ball, or they have been sold this story of they need all this money to get started in real estate. And a lot of times that story is only being sold to people who are newbies, because people who are experienced, they know that money is always around, and there's always someone who's willing to lend. There's always someone who is willing to put their money to work as long as the numbers make sense. And so my next couple of um, podcast episodes is going to go more deeper in that. You are going to hear from other people outside of myself, but you're going to hear from people that I know personally, that I have some type of relationship where they are giving you their picture of what it looks like. And so that is where we stand with the conversation of creative financing. If that is something you desire, you are building out your portfolio, creative financing is going to be something that you may want to look at, because every deal is probably not going to be a very cookie cutter deal. Um, the individuals who are looking at cookie cutter deals, they're kind of hurting now, because it was easy to do cookie cutter deals between 2020 and 2022. Cookie cutter deals were easy. That's why everybody was pretty much saying, how easy real estate is. A lot of people have exited the industry. They've exited the industry because now the cookie cutter deals are pretty much, they're not as plentiful as they were. So once again, this is Lorillia. As always, um, if you have conversations, I just realized I don't even have my ticker running here. Um Please go to www.neverloseadeal podcast, or www.neverloseadeal.com if you want to learn more about creative financing and having more discussions on ways that you can currently put deals together. That page itself will give you a rundown of what it is that I am currently doing and how I'm currently working with people in the creative real estate finance space, especially when it comes to expanding a real estate portfolio. So, once again, this is Lorillia, and I will see you in the next podcast